Yes, having said that, I'd probably keep putting my money on value stocks. We had a terrific spurt in the growth sector last year, and obviously some of those big market favorites have faltered a bit, and yet there's interest in owning some of the stocks that really didn't take part in the market advance over the past couple of years, and which may do fairly well if some of the economic forecasts turn out to be a little bit too cautious. And I'm optimistic and thinking that world economies are going to do a little bit better than people are thinking, and that there are some opportunities in the industrials, the materials, possibly energy and the financials over the next several quarters.
What is making you optimistic, John?
Basically, looking at the employment situation in the United States, people have a little bit more money to spend. Looking at Europe, appears to be some recovery underway there. Some changes in government here and there around the world could produce some more positive business climates. We think China will improve. Still some big question marks, obviously, and it's an important economy, but we're basically fairly optimistic about the United States at this point, and we think that that can help Europe and Latin America and parts of Asia.
Okay, when you're looking at the overall picture, then, if you are optimistic, you said you were looking at value stocks. Where specifically are you looking? Materials, industrials, any specific companies you have in mind, John?
Yes, we like some of the railroads, which should benefit. They benefit in a very general way when industrial activity perks up, when exports rise. Financials should be more lending opportunities. Credit quality should hold up. We like the consumer sector, especially some of the consumer cyclical companies. We've had some good results in broadcasting companies over the past few days. Advertising has been a little stronger than people had been looking at. And so that can be a leading indicator of some better economic times down the road.
John, we're going to be looking in more detail at another company today that of course, you know well, and that is McDonald's. Out of the 32 analysts that cover the stock, there is only one sell right now on McDonald's as a company. Of course, it hit record highs in the overnight trading session. What would you be doing here with levels? Is it overpriced at these record highs, or is this sort of price movement justified?
McDonald's has made a nice recovery. I don't want to make a particular prediction about an individual stock, but the company has done well. They had a change in management, a little bit of a change in course, 24-hour breakfast now, I guess, and that's helped, and they've simplified the menu. But it is an expensive stock relative to where it's sometimes traded in the past, and I think with any stock like that, you have to be careful that the earnings estimates are accurate and that the growth prospects are intact. And my own inclination is to look at some of the stocks that aren't discovered yet, that aren't in favor, that may be reflecting some more pessimistic outlooks, and where if you have a different point of view, you might be able to position yourself in advance of market recognition of that opportunity.
So are you hedging this defensive portfolio that you have right now, John?
Still like a lot of the defensive names, and I, again, tend to be optimistic, but you always have some ballast, some protection, some insurance, and so I'm still emphasizing some of the consumer staples, some of the healthcare names, utilities, which I think still present good values, and where there's some merger and acquisition activity underway too. But my approach is to stay diversified, to look long-term, to set targets and stick with them, and not trade excessively, not move with every shift in the wind across the plain, but instead look out 3, 4, 5 years and figure out an earnings power that a company might achieve and invest on that basis.